Hello and welcome to Property Matters here on Dublin South FM. You can contact the show on Twitter, Facebook or LinkedIn at iPropertyRadio or email hello@ipropertyradio.com. Your host for today is myself, Carol Tallon, and I'm delighted to be joined by Damien Browne of Standard Access. Standard Access are the creators of the digital spine operating system for smart buildings. Damien, you're very welcome back to the show. It's been a while since we joined you from your office in Dingle. How have the last 6 months been for the Standard Access team?
Hi, Carol. Yeah, thanks for having us on again. Like every business is being challenging, but we were always a remote team anyway, so it didn't really affect us that much from a work point of view. And we've always been collaborating online, so it's a challenging time, but we're looking forward to the end of this period later on this year.
Yeah, I don't doubt that. So since we spoke last, I saw in the newspapers that Standard Access had a big win and a hard-fought win. So congratulations! Just around Christmas time, there the company secured a US patent. You might just explain to us what that is and why it's significant, and was it worth spending 5 years battling to get that patent?
Yeah, it was a long battle. It was tedious and it was time consuming, but in the end, it was worth doing it. We applied in 2015, and it took the full 5 years for it to come through. And normally those things only take about 2 years. But we got a patent on what's called monetized time restricted access. So that means using your phone to book a space, pay for it, and using that phone to access through the door. We developed our intellectual property around encrypted audio sound on your phone. And
very good. So, what would be the use cases of that? Where would we see that in operation?
So, you've seen the advent of co-working and flex operators around the world. WeWork would be the big name. So the ability to book and pay and reserve space, pay as you go, and use it when you want to use it. And we went a little step further in introducing the key as well and security around that. So it's like book, pay, reserve, have your key and walk through the door.
Damien, I'm marvelling at the foresight here, because back in 2015, the conversation around flex space wasn't quite as robust as it is now, and certainly the need wasn't as strong as it is now, particularly in light of the pandemic. So what led you to that back in 2015?
Well,
what was your background?
I was in commercial real estate all my life, so I was buying and selling investments in Ireland, the UK, and a little bit in Europe. So managing tenants, getting lease assigned, maintenance, engineers, carry out repairs, and some small developments as well. And of course, the recession came 13 years ago, and just trying to cut costs left, right, and centre, and just trying to look objectively at the whole portfolio and managing portfolios and facilities management. And when I was looking objectively, I was like, okay, this is completely insane, because we're repeating the same things in every site, and we're not using technology. So I was like, okay, this is burning a hole in my pocket. I'm going to do something about it. And it took me a couple of years, but eventually got the light bulb moment in 2013 that I could maybe use technology to sell space, rent out space, and utilities using mobile phones and laptops. So it came from a hole in my pocket, really. So it's like someone said to me, it's a practitioner-led solution.
Yeah. And look, we know that that's generally what drives early stage innovation. Now, congratulations again on securing the patent. It's a huge deal and it's a massive achievement. So well done to all the team. But in Ireland, and certainly in Ireland and the UK, your team would probably be best known for creating the digital spine solution for smart buildings. So this is one of the things that actually we've referenced on the show before, because every week we try to meet proptech startups at different stages of startup, and they're generally working through the installation of IoT devices, so sensors, and then they're feeding data back in. And then, we've talked at length about the importance of using that data and understanding it and having it intelligently supporting decision making. But one of the areas that we haven't covered a lot are all the points of vulnerability that then opens up, and how vulnerable that smart building becomes, and the data. That's the transmission of the data between all of these sensors. And is it fair to say that conversation just wasn't, maybe it was happening, but it certainly wasn't very loud, about the security of data now that these buildings are being fitted with all these IoT devices? So will you explain what the Digital Spine operating system does and why it's important?
Sure. Well, first and foremost, our two core values would be on data privacy and the secure data transmission and the security of people using the buildings we put our technology into. So even back in first day 2015, I wanted to not alone to monetize space and the access control, I also wanted to be able to build people for telecoms and air conditioning, heating, lighting, usage of everything in the building. But unfortunately, the technology wasn't there, and I didn't have the resources to do it either. So I just concentrated on the access control. 2020, we started to reevaluate everything because of the COVID. So we thought, okay, can we do this now? Can we bring a system into a building that can connect to all the different siloed bits of information? So you have HVAC, you could have elevators, you could have access control, security, CCTV, compliance, hardware, software, tenant apps, landlord apps, and they're all siloed bits of information using different protocols to give you information off the dashboards. So it's a bit insane to expect landlords to adapt all these technologies and to pay their staff to use them. So we wanted to, as well as that, then you've the IoT sensors for water flow and monitoring electricity usage and stuff like that. And all these devices that are going into buildings, not all of them, but a lot of them would have a lot of security vulnerabilities in the systems. So somebody could actually hack into your building, and it has happened in America last year. Not publicized well, but it will happen this year in London or New York or some famous building. The hackers, just for the hell of it, are going to go in and are going to shut it down. They're going to turn off the lights. They're going to stop the elevator. They're going to unlock the doors. They're going to switch off the air conditioning, which is going to become a major news item, unfortunately, because of COVID. And so we obviously been aware ourselves about secure data transmission. We thought, okay, can we help our clients adapt technology faster, but be secure in the knowledge that the data that's been generated and the vulnerabilities, have been secured and disabled. So, looking at all these different data sets and all these different protocols, how do you do that? Well, while we do that, and what we're doing is we're building, if you want to call it a black box for a building, that will connect to all the different technologies being used in the building and convert all those protocols into one singular protocol. So the user will have one dashboard, and on that dashboard, they can select by room or by floor or by building, and they can see the usage by individual or by for the movement of people, the consumption of electricity, heating, lighting, and all. Is everything being compliant? Are we up to date and everything in real time? And then go check back in maybe a year back in time as well. But all that data then, once we've collected it and we're securing all the data being transmitted in the building, then we start to apply machine learning and artificial intelligence algorithms to make sense and identify the valuable data and give it back to the user and say, listen, here's the data. These actions can be done now autonomously and reduce down your amount of labor and people you have managing your buildings. And that data is quite valuable to people. But at the moment, it's all over the place. It's disparate, and so that's where the digital spine came from. Basically, a digital twin. So in construction, you have digital twins for construction. This is a digital twin for operations, and it's an operating system for a building. So think of like a phone. A phone has an app store, and you can go and buy whatever services you want through the app store. This is like a black box phone, if you want to call it, for a building, for a real estate building. And then you can choose all the different technology you want to plug into it. So,
yeah. Damien, excuse me, Damien, I'm aware that if we were having this conversation 15 months ago or 12 months ago, even perhaps, the conversation would have been very much geared towards sustainability. So, let's just discuss that before we move on. In terms of sustainability, so am I right in assuming that your system can, track the energy performance of the building in order to, I know that your company is specialist in artificial intelligence. So is that how that's being used to prompt energy efficiencies, to prompt actions?
Of course, yeah. We build our hardware agnostic as well. So we're open to other vendors. They might have a fantastic HVAC product that might already be a vendor to a potential client of ours that is, hey, you can still use that system. We don't mind. We'll just plug it into ours and plug in the CCTV and plug in the access control and plug in the tenant apps and the landlord apps and put all the data into one place and make it very secure. But yeah, the HVAC systems that companies are developing and putting into buildings, they can save you a lot of money on heating and on lighting, but more importantly, reducing your emissions. Because, I think we've reached almost an inflection point in the last 12 months where companies are finally deciding, okay, we need to adopt technology because we want to make people feel safe coming back into buildings, just from the health of the building, the air, and, and as well as that, you see we've all seen the rise of the green type funding in the world now with banks are saying, well, how healthy is your building? How efficient is it? Are you going to make it more efficient if it's a small building? And with our technology, we can help people do that, because when they want to sell that product in 8 years' time or 10 years' time or 12 years' time, the people who are going to buy that product, they mightn't be allowed to buy it. They mightn't be able to get finance for it in 10 years' time when it becomes across the board that, your building has to be at a certain level before they get finance to come and buy your product. So you want to enable the yield to stay high, you've got to invest now. And, it's thankfully it's starting to happen now.
Yeah, it's interesting there. You likened this almost to the digital twin that the construction industry would be well familiar with. And in fact, we've spoken at length about how, by delivering a digital twin, the contractor is actually handing over two valuable assets, one a real asset, one a digital asset, but they both have value. Are we at a stage where even for leases on commercial buildings, you're going to be handing over what is effectively a digital twin with a health check, with a health record, so almost like we do with our cars, as in a service history with our cars, so you can tell what the performance has been, what the energy performance particularly has been in terms of emissions, carbon footprint, and how that's going to impact on the sustainability goals of the particular company.
Yeah, 100%. I think within 4 or 5 years, I think if you don't have that information digitally available, people won't buy your building because there's too much risk involved, and they don't want the hassle of it. They'll expect you to do it. They'll expect you to invest in technology. They'll expect you to absorb that cost because they don't want. If you're not doing it, why aren't you doing it? And I think it'll become commonplace with it quicker than we think. And like the digital information will be available in real time to the operators, and the banks who are going to fund the next buyer of that building will say, well, show us the data, and you say, okay, here's the way into the platform. Here's your keys, your cryptographic keys. Go on, knock yourself out and check out all the data for the last 10 years or 12 years or whatever it is. So it can be done in all buildings as well.
And you can see how that would impact on the value as well. So obviously the more information, the more valuable it is, but also the more information, then that should be prompting the right action as well.
Yeah.
Damien, for your own team, when does the standard access team get involved in projects?
At any stage, Carol, we do a lot of retrofits and we do new buildings as well. Ideally, at design stage, we'd like to sit down with the architects and the surveyors and understand the requirements of their client, and maybe give them a recommendation of what technology to use. We can say, look, we recommend a list of vendors for that type of access control or CCTV or HVAC and tenant apps, or if you want, we can customize this for you, and we can white label it and brand it to meet your requirements, and something that will stand the test of time, because you want this to be there. When people buy technology, the biggest fear is, will it be redundant in 12 months' time or 24 months' time? So what we're doing is we're eliminating the redundancy risk for people, saying, okay, if you want to change the access control in 3 years' time from that vendor to another vendor, no problem, just plug it out and plug in the new one. So that's what the digital spine operating system is about. It's making it interoperable and not being confined to having to buy everything off us. You can buy off wherever you want. So.
Yeah, a lot of these things, we've been discussing it, through the show for close to 3 years. But, and one of the things I've seen is that there's, prior to the digital spine operating system, there was a lot of separate things going on that didn't work well together. And in fact, we see that across construction tech. We see it across residential proptech as well. In fact, it's something that, has really been identified as a problem, and also almost a point of resistance in terms of adoption, but also allowing the sector to grow. So I'm always aware that I'm coming at this maybe from a different place than maybe commercial property operators who, this has been on their radar for a while, but they haven't taken steps towards it. Maybe, they've brought in something to measure energy performance efficiencies or something, but, they haven't really gotten started. So, this is a big question. I hope it's not an unfair question, but I mean, what kind of advice can you give to commercial landlords, but also to the construction industry who need to be familiar with this? But what kind of advice can you give for professionals really just embarking on delivering smart buildings?
Reach out to the proptech community in Ireland and the UK, I suppose. And maybe attend some webinars, get familiarize yourself with technology, and go and talk to people who are using technology already. Go and talk to some of the people who are taking the lead in this area. And see, what's the best advice? Is that type of access control good? Is that type of CCTV good? Is that a good system? Was it easy to adopt? Was it easy to integrate? So that's one thing we do is if you already have technology in a building, we'll integrate it with that technology, with that building management system. Like I said, you don't have to buy everything from scratch again.
Very good. Well, I'm going to add one thing to that piece of advice, and that is to go onto your website, because actually I find myself being referred to your website actually whenever we look at issues of, or we're Googling issues of security or IoT. So I know Standard Access has become kind of the place for guidance for IoT and artificial intelligence and indeed securing smart buildings, not just in Europe, but globally. So, it's something that through PropTech Ireland makes us incredibly proud of your team, that you're really pioneering globally. So best of luck to the team and continued success. Again, thank you so much for joining me today. That was Damien Browne of Standard Access, creators of the digital spine operating system for smart buildings. We need to take a quick break. Stay tuned.
93.9 Dublin South FM.
And welcome back to Property Matters on Dublin South FM with myself, Carol Tallon. You can contact us on Twitter at iPropertyRadio or email hello@iPropertyRadio.com. I'm now delighted to be joined by Professor Andrew Baum, Professor of Practice, Saïd Business School from the University of Oxford. Andrew, thank you so much for being with us today. This is your first time on the show, but your name has been thrown around quite often. You've been quoted quite heavily here in our PropTech section. So thank you so much for being with us today.
It's a pleasure. Thanks for asking me. I've got happy memories of being in Dublin, and it's nice to be back, even if it's just remotely. Thank you.
Well, Andrew, you're very welcome into studio. At the moment, we're recording from home as well, but when we're back in studio, we'd be only too delighted to welcome you there. So, Andrew, as I mentioned, your name will be familiar to anybody who's been listening into the show. We're now in our third year, so yeah, like I said, you've been quoted quite heavily during that time. But you might just give people a little bit of a background, because as I introduced there, you are with the Professor of Practice with Saïd Business School. But how long have you been involved in the real estate and lecturing in the real estate industry?
A really, really, really long time, Carol. So I went to Reading University to study real estate when I was 17 years old in 1970. I started teaching at the university in 1975. I've got 3 real estate degrees from the University of Reading. Since 1990, I've been working for either 1 day or 2 days a week in the university, whether it be Reading, Cambridge or Oxford, and doing some visiting stuff in North Carolina and Sydney. I was also visiting examiner at DIT in Bolton Street for a while, which I really enjoyed. But for the other 3 or 4 days a week, I've been in business either as a CIO, Chief Investment Officer, or a head of strategy or head of research for people like Prudential, Nuveen, CBRE Global Investors, Invesco, and others. So I continue to have a business interest and a business life, and the classroom is a place where I really enjoy. I enjoy being in the classroom, and I think the students probably appreciate the real life case studies.
Yeah, I've no doubt. I didn't realise that you had spent time at DIT. So were you visiting there?
Yeah, I was the examiner for 3 years, I think, and always great fun. Always great going to the Museum of Irish History and being told that the English aren't as nice as we think we are. So I've really enjoyed my cultural exposure in Dublin, and I'm looking forward to coming back.
Oh, very good. Well, actually, when you are coming back, be sure to visit. DIT is now TU, Technical University Dublin, and the new facility at Grange Gorman is stunning. So you will get a great surprise when you visit that. So I recommend it. But in terms of your background, so it's good that you have that, that you've kind of kept that 1 foot in industry and 1 foot in academia. How important is that when we're looking at innovation at a very real level that can actually impact the industry, and that is readily accessible to the industry? How important is that to have the commercial and the academic focus for an industry as traditional as real estate?
Well, there's a constant tension here. I mean, from my perspective, it's ideal to be partly in business and partly at the university. From the university's point of view, it's not ideal because it needs completely committed academics who are going to publish in the best journals. And to do that, it takes a long time. The average time to publish in a really good journal is probably 2 years. And the world of innovation in real estate might move slowly, but it doesn't move that slowly. You don't want to wait. You don't want to write something and wait 2 years for it to be published. So there's a compromise going on all the time, and I can't be a brilliant business person if I'm only working 3 days a week. So there's a compromise all over the place. But I have to say, I think the benefit of doing both is that I can organize my thoughts when I'm in the university. I can construct a PowerPoint presentation pretty well. And I think that goes down pretty well when you're talking to business people that need their thoughts structuring and being organized. And it works the other way around in the classroom, as I've said before. So I think what happens is you just have to work 6 days a week, which I've been doing for the last 25 years or so, and just work hard.
I think that you'll find that's quite symptomatic of every entrepreneur in the industry, and particularly what we're seeing across the startup sector in proptech and construction technology at the moment. But one of the things I was really interested about is I first became really aware and involved. I think I learned the term proptech back in about 2015, but I'd been very passionate about innovation and I'd been in the industry for about a decade before that. So it wasn't so much that the innovation was new, the use of technology was, but there was a lot of new language and terminology around it. But your report in about 2016 was one of the foundational pieces of research. So you might just take us back how you got involved in that.
Yeah, sure. And I think we need to go back to 97, really, 97, 98. I mean, I was working in the real estate industry in London in 96, 97, 98, and the internet came along. So email came along. And, before that, we were actually sending paper letters and all that sort of stuff and using the telephone. So observing the internet, I saw the dot-com boom of 99. And I got involved in the dot-com boom in 99, 2000. The dot-com boom is really best remembered as a dot-com bust. The 2001, 2002 period led to a massive bust. There's a lot of money going into property technology in 1999, 2000. A lot of businesses that survive today, like CoStar, Argus, in the UK, Rightmove, in the US, Zillow, these sort of residential listing sites, they came out of the ashes of the dot-com bust. I started first of all, I was editor of a property encyclopedia in 1999, and we realized about 2 years in that we should really be putting the thing online. And we had to completely redesign our business model and go for an online business information product. In 2001, I also started a database of property funds globally, and that immediately went online. Originally it was CD-ROMs that we were posting out to people, but eventually that became a website, and that still exists today. So I think I did start a proptech business in 2001, and I call that proptech 1.0. So that period is proptech 1.0. Then sort of there's the dot-com bust. We went through a period when people weren't really interested in technology. It was all about money. It was all about bank debt, buying as many buildings as you could. The property boom of 2003, 4, 5, 6, which Dublin is probably the epicenter of it. If you think about it, the boom that was going on was incredible. The amount of bank debt that was being secured was incredible. So nobody was really worried about technology at that time. It was all about debt. And then, the crash, 2008 crash, coincided with the launch of the Apple App Store. And the iPhone 4 was out in 2008. The App Store was launched. And you've got a younger generation who are now skeptical about the way in which the traditional markets can bust themselves. We've got a bust banking system. We've got people that you can't trust running funds. You've got people just taking huge bonuses out of the industry when people are losing their jobs. So, there must be a better way of doing this. So the App Store appeared to be a better way of communicating. And if you think about this is one of my most sort of simple rules or sort of aid memoir is the world is just full of billions of rooms and billions of people. And those billions of rooms and billions of people are trying to connect with each other all the time. We're constantly looking to go into residential accommodation, offices, shops, pubs, bars, whatever. And before 2008, the way in which rooms communicated with people was through brokers, through newspaper adverts, through websites, but it was pretty clunky. And the App Store suddenly gave us this formula whereby people could go through a platform to communicate directly with the rooms. And of course, that's Airbnb. So Airbnb is created in 2008. And it became a $1 billion business, a unicorn, and then we can repeat that formula over and over again. We've got rooms, we've got people, and we've got an app, and that's really the genesis of PropTech 2.0.
Okay, and on that basis, you're talking about a skepticism that existed and perhaps a distrust of systems. I like the distrust may not have been new and the skepticism, but maybe the actions coming out of it were new. So certainly in the early stages for PropTech, what you would describe as PropTech 2.0, we were seeing a lot of consumer-led innovation, and that seemed to be born out of the skepticism and frustration. But already we're seeing just 5 years, 6 years on, already we're seeing a shift towards more industry-led innovation. Is that just something we're witnessing maybe in Ireland and the UK being maybe a little bit behind some of the other trends, or would that really be indicative of how innovation is being driven?
Well, I think there's a natural curiosity amongst the man in the street and the woman in the street about why it's not possible to trade your property in 3 days online. So the mass market connects with real estate through housing, through house prices and house purchases. And what they observe is that although you can go online now to look at the listings, you can't rapidly transact. You've still got to go to a lawyer. You've got to do a lot of work. You need to assemble lots of paper documents. And I think the man in the street is genuinely a little bit confused about why that can't be done more quickly. If you look at it, it is possible to find reasons why it can't happen particularly quickly. It's just too big a transaction. There's too much risk on behalf of the purchaser. They want to use lawyers because they want the protection of having a lawyer making sure that everything's okay. And if it's not okay, they want to be able to sue the lawyer, or they want to be protected. So the man in the street, I think, as there's been overinvestment in the residential property market, technology, speedy transactions, all that. That's been a bit overblown, a lot of hubris. Meanwhile, however, there is a really good reason why commercial property owners need to innovate. They really need to innovate. The whole long lease structure where a developer builds a building speculatively, sells it to a pension fund that has got no connection with the tenant, and then sort of subcontracts the property management down to a broker or a property management company. means there's no connection between the development of the product and the user of the product. And the word customer then has to come into it, right? So if you're running a hotel, the people using your hotel rooms are customers. But an office developer or an office investor doesn't think about his office tenants as customers. And this is the real revolution. This is what's really going to change, because now with all of the things that have been going on, shorter leases, more power in the hands of tenants relative to landlords because of the creation of massive space, cyberspace. You look at the retail market, there's all this cyberspace now through which we can trade. So the owner of retail property is in a less powerful position than he used to be. So now he's having to think about, well, how do I make my customers happy? What do I have to provide? What services do I have to provide? And COVID has done the same to the office owner. So how are you going to get people back into the office 5 days a week? And what happens if you can't get them back in the office 5 days a week? Do you need to provide wellness facilities? Do you need yoga studios? Do you need great technology? Do you need great coffee? What is it that's going to make your building worthwhile? So we're now entering this phase where we need to connect customer satisfaction with rental values and lease structures. And of course, the WeWorks, the co-working operators have been in the vanguard of thinking about this stuff. And I don't think the market will ever be the same again. We used to have 25-year leases in the UK with 5-yearly upward-only rent reviews. We're never going to see that again.
Okay, there's so much to unpack in what you've just said there, but let's start with the most recent and work backwards. In terms of commercial property and the long leases, I fully accept that there is a strong demand, a desire for more flexibility, and that flexibility inevitably means shorter term leases. Although I am recalling a masterclass delivered by Anthony Slumbers, who obviously would be well known for speaking about space as a service. And, one of the things he noted through his research and through research that's available is that short-term or long-term leases are getting shorter, but the short-term leases are actually getting longer. But in terms of the commercial property long-term lease structure, how do we reconcile what the market wants with what funders and landlords can afford to do? Because I think sometimes when we have this conversation, there needs to be an understanding that each cog in the wheel has a financial master. Everybody is accountable to somebody. So how can we make the shift that the market wants in relation to the commercial lease structure and still make it viable?
Yeah. Well, I don't think this is as big a problem as some people possibly feel it is. I think you've got to look at the equity provider and the debt provider differently, I think. So the equity provider has nothing to fear. If you produce a good product, then the fact that the lease is short should not be an issue. The relevant data that you need to then focus on is how quickly do people release the space? What is the dead period? What's the downtime between leases, between the lease end and the new lease? If you start focusing on collecting that data and understanding how it works, you'll generally be pleasantly surprised. The amount of vacancy at the end of a lease is generally short. People generally renew their leases. Tenants generally don't operate break clauses. There's a lot of inertia and a lot of reasons why people want to stay in the same space. So landlords need to be much more confident about the product that they're offering and short leases. If that's what people want, then you'll find that your occupancy will be surprisingly positive. Debt providers might have a different view, but they need to catch up with the idea that these things are, living assets. That they need to be, a 5-year debt term is long enough for a 5-year lease, and that's probably the match. In the past, I think there's been some dishonesty, really. I think people have tried to use long leases to avoid the inevitable refurbishment cost that they know is coming around the corner. And the old way that a London landlord would think about this was, well, let's build the building, let's build it as cheaply as we can, and let's let it on a 25-year lease to JP Morgan and then sell it to a pension fund at a big price. And they're getting it off their balance sheet, right? So they're shifting it onto somebody else's balance sheet. Then the poor old pension fund comes along and they've got it on their balance sheet and they've got a 20-year lease. And at some point down the road, they've got to choose when to sell the building to avoid the big refurbishment cost that is down the road. And either they don't, and they end up with an empty building, which is 25 years old, which needs complete demolition and rebuild, and their performance turns out to be awful because they bought the depreciation, or they try and get rid of it 10 years early and pass it on to somebody else. But somebody's going to have to pay that price, And it's much better to have short leases so that you recognize the fact that every year you need to be spending money on the building, just like we do on our houses. You don't want to buy a house, leave it for 30 years, and then find, oh my God, I've got to replace all the windows, replace all the doors, replace the bathroom, replace the kitchen. You need to be doing it on a rolling basis. And that's good for the environment. It's good for the economy. We should be retrofitting everything on a regular basis to produce buildings that are fit for purpose and that will be resilient in capital value terms. So none of this build, let it become obsolete and then worry about it later. That's gone.
Do you think it's two different conversations we need to be having? On one hand, office buildings, and on the other hand, retail, because the changes in retail are different to the changes in office. While they're both changing a lot, it feels at this stage the rate at which they're changing and the direction in which each are going respectively, it feels like they're going to end up in very different places, where retail is going to be more online, whereas offices are going to be more experiential. And that's something that maybe we might have used to describe retail trends. But, just for example, I was reading there in The Guardian last week about, I think somewhere in the UK, a Debenham store was taken over by a university, and it has been a department store. Like prior to Debenham, it had been a department store for more than 100 years. And now it's going to be used as a training facility and tuition rooms as part of the university for healthcare students. And it definitely got me thinking about alternative uses for some of these core retail buildings in town centres. So are these changes that are coming, and that's obviously going to have an impact on lease terms?
There's a great book, Rethinking Real Estate, by Dror Poleg. I don't know if you've seen that. I'm sure you have. But his analysis of the retail market is really interesting. Retail has been has always been in flux. There's always been innovation in retail. It's just constantly moving. Shopping centres in the UK are not that old. They've sort of covered in-town shopping centres not that old. Retail warehouse parks are pretty new. So there's always innovation and change going on in the retail market. I mean, I think you're right that there is continuing change, and it's a real challenge thinking what to do with shopping centres right now. I suspect they're going to be more experiential, just like an office building will be. And a lot of retail property owners are thinking about that. The really difficult ones are where the rental value is clearly falling and in free fall, and the operating costs of those shopping centres remain quite high. And so you've got a real problem there in making money out of them. And it'll be interesting to see whether they offer opportunities for last mile logistics or for residential or experiential, entertainment, whatever it's going to be. But that is a challenge. There's no doubt that's a challenge. I'd be more comfortable with a retail warehouse park than an in-town shopping centre right now. So that is a challenge. There's no doubt about it. But it's worth bearing in mind that the best performing property sector for the last 10 years has been high quality retail in Europe. It's not a complete dog. Shops in Bond Street are still selling on 3% yields.
Just because you've mentioned Dror's book there, Rethinking Real Estate, and on the subject of rethinking real estate and the future of it, your own university is launching a new program. Can you tell us a little about that?
Yes, thank you. March the 31st, we're launching a program called the Oxford Future of Real Estate program. It's an online program. It takes spread over 6 weeks. So you spend about 7 or 8 hours a week for 6 weeks on 6 topics, including the future of the commercial property markets, the future of real estate investment, and so on. It's about €2,000, and anybody can sign up for it. So it's the Oxford Future of Real Estate program.
Very good. And can you give us a little bit of insight about the kind of things that will be covered on the curriculum? And that's really a roundabout way for me to hear from you without paying the €2,000 for the course and spending the time. what are the trends we're likely to be seeing? Because I remember reading a lot in early 2020 about the trends we were likely to see, and I am exhausted by the cliche of the pandemic accelerating trends, and I think that's an oversimplification. We're definitely seeing a shift. We're seeing a shift away. So it's not just an acceleration of trends, but where I suppose, given that you're working with research teams here, what kind of insights are likely to be shared?
Well, the big change. The first unit's about the property universe and the mega trends that are going to be hitting it, and a lot of those are pretty deep seated. Globalization, demographics, migration, housing shortages, growing wealth divisions between the rich and the poor. All the impact, social impact, and the big one, climate change. So all of those things are much bigger than the COVID effect. And the first module will be considering those things before we move on to looking at valuation, finance, investment in a not a traditional sense particularly, but just thinking about how you model these things. Before we then look at the commercial property markets, the future of retail, future of office, future of logistics, then the housing markets. How do we build enough houses for everybody, and how investable is social housing, for example, which is one of the most attractive investment propositions I've seen in the last 3 years was affordable housing in Dublin, and that's a great sector to invest in. Then the fifth module is about development, sustainable development, developing regenerating cities, smart buildings, and climate resilience. And the sixth module is all about building a resilient global portfolio. So if you had a £1 billion to invest, where would you put your money? And it wouldn't look like a traditional real estate portfolio. It wouldn't be 40% retail, 40% office, 20% industrial anymore. It will look completely different. And so the students are asked to think about what product would they create to sell to big investors right now.
Okay. Do you see proptech actually figuring into that? Like, are we going to see people who might ordinarily have invested in real assets maybe begin to look at investing in the technology supporting those real assets?
Absolutely. Yeah. So proptech's like the writing in a stick of rock, goes all the way through it. It's just fundamental now. Technology is the opportunity we have to produce more efficient buildings, more energy efficient buildings, reduce carbon, produce more satisfying urban environments. The whole thing is technology focused, and we have to take it extremely seriously. Amara's law says that we overestimate the impact of technology in the short run, but we underestimate the impact of technology in the long run. And we're rapidly getting close to the long run now.
Yeah, I've always thought that idiom really explains. I think it explains the unexplainable, which is human behavior, and maybe that's something that has been accelerated by the pandemic. The culture shift that has to happen, because I think that's the thing we tend to underestimate, and yet that's the thing that slows progress. It's the human factor, the resistance to change, the needing to be convinced, and I think that's something that might have been very strong prior to the pandemic that maybe has been weakened somewhat.
Yeah, I mean, I think human beings do adapt without realizing. So investment committee papers, we used to get paper maps. We used to get descriptions of where somewhere is. We don't do that anymore. We just go onto Google Maps and we zoom in on the building. We get a picture of it from the air. We can do the street view. We got the whole thing on technology. We're using Zoom right now. That's going to be something we're very comfortable with. We're using a lot more technology than we actually accept we're using. It's part of our lives all the time. It's just step by step. We're just getting more and more technologically competent. Although I'm not as competent as I'd like to be, obviously.
Well, I something tells me there's still opportunity. We still have another while to go in lockdown, or certainly restrictions. So actually, I think there'll be plenty of opportunity to get even more familiar. It occurs to me that a lot of the curriculum of the course, it's coming back to the UN's Sustainable Development Goals. There's a huge crossover there. There are so many social, moral, environmental reasons for us to be adopting those as an industry. Have we established the business case for that? Do we need to?
Without any doubt at all. I remember talking about sustainability 10 years ago, and it was a word that I can remember using it thinking, well, I don't really get this stuff. I don't really buy it, but I know I'm supposed to talk about it. There's no real evidence that it's going to add any value to my portfolio if I prove that I'm producing sustainable buildings. It was just the right thing to say and do. Now, there's just no question whatsoever. The idea that you need to compromise your return in order to do the right thing, I think that's gone. I think if you just look at the if we go for zero carbon by 2030, for example, if you want to be carbon neutral at 2030, if you buy a building now in 2021, you'll be selling it into a market which is thinking about 2030. And so the resale value of a building which is not going to be energy efficient in 2028, which is when you're going to be selling it, you're going to be hammered. So it's already in the decision making. It's not pie in the sky anymore. It's not liberal wishy-washy thinking. It's right in the hardwired finance world now that you have to produce ESG acceptable buildings, portfolios, business practices. I chair a fund management business in the UK called Newcore Capital. We've just been certified as a B Corporation. It means that we have to run our business according to sustainable business principles. 10% of our profits go to charity, et cetera, et cetera, et cetera. That is going to help us enormously in raising capital. It's going to help our business because pension funds need to show that they're doing the right thing. And if we're going to win mandates, we're going to win it from people that have got the right ESG motivations, and they're looking for managers with the right ESG motivations. We're only going to buy buildings from developers with the right ESG motivations, and so on and so on and so on. And occupiers are only going to take our space if it's healthy, if it's energy efficient, and if it's not throwing out carbon into the air. So the whole that game is now, everything's aligned beautifully, and Greta Thunberg's done a great job. COVID has helped. I think it's just accelerated things a little bit. But there's no doubt that the big issue for the next 5 to 10 years is all about carbon. It's all about environmental performance. And the property market has that issue, front and sideways everywhere. It's the big thing that we've got to cope with now.
Yeah, no, look, I absolutely agree. And in fact, I had the pleasure of speaking to Michael Beckerman and about the launch of crea Climate. So that's a global initiative to try bring the industry together and align on some of the actions that need to happen. So, there are some great global initiatives happening at the moment. Before I let you go, you mentioned something to me, and I really, I'd love to get some kind of clarification around it. You mentioned there that, you feel maybe the proptech aimed at the residential market and maybe the consumer market might have been, at this point, it might be a little bit saturated, but at the moment we're still seeing a lot of ad hoc, not a great amount of cohesion across some of the consumer facing technology. And you mentioned that it might be the curiosity of the man in the street as to, can this be done better? And I agree. I think there is curiosity and confusion, but is there a level of acceptance that when it's a big transaction, for many people, it might be, buying your home or getting your mortgage might be the biggest financial commitment of your life. Is there somehow an acceptance that it's okay not to embrace technologies? Has that been, is that a problem, or is this just something that you think technology and time is likely to align people's expectations, and they will just get used to doing all these transactions online, like even like consumer facing ones?
It's a big question. I sort of the reason why transactions will not be instantaneous and online and costless for quite a while is that, number one, we need digital data about the homes. In the new build market, we're capable of producing digital, property passports, digital twins. It is possible to create a digital pack of information which describes everything there is to know about the house, from the architect's plans through to the boiler units, manual, whatever. Everything can be digital and handed over in a pack. But that is not going to work for 95% of the existing property market or housing market, because the houses don't have that digital record. The house I'm sitting in right now was built in 1880. There's no way I've got a digital architect's plan of it. So that's going to be slow. And the second aspect is that caveat emptor is the rule that we're working with. The buyer beware. And so the buyer is going to be very careful before, instantaneously transacting on a £1 million or euro building. So we're going to go carefully down this road. It's going to be somewhat slow and painstaking. On the other hand, there's no doubt that we will start to assemble digital records, and those digital records will be much more efficient. And at the same time, you're going to see the big tech companies like Amazon, Google, and others having a very subtle but insidious impact on the housing market. So Alexa, for example, is going to be in the home. And once it's in the home, it's going to be collecting information about the home. And that feedback, that data feedback will be used to produce more efficient housing. Facebook are already building affordable housing for their employees. I think you're going to naturally find that the big tech companies start to get more and more involved in real estate. Google's built its European headquarters in St. Pancras. These things are just getting closer together all the time. So once the big tech companies get involved, then you will see some real change. But don't expect it to be rapid for 95% of the housing market, because we're dealing with assets with no digital information. Somebody asked me about somebody asked me about a building that I'd owned a couple of years ago, and said, could you assemble all the information, the fire safety certificate, the smoke alarm detector stuff, or whatever it was, and could I find any of the paperwork? Was it on my computer? No. Was it in my filing cabinet? Yes, some of it. Was it my wife's filing cabinet? Yes, some of it. Was it in our lawyer's office? Yes, some of it. I mean, it's a mess.
It occurs to me that if there was a value in having a second asset, albeit a digital one, in the same way digital twins will be a second asset when design and build teams are handing over an asset to their client, if there was value in that, we'd find a way to make it happen very quickly.
Oh, that's for sure. And there are people out there who are definitely trying to think about that. How do you incentivize people to produce digital property passports? What's in it for them? And I've seen several failed attempts, and people will keep trying. Facebook for houses is one of the ideas. Why wouldn't every house have its own Facebook page with its history? Who owned it before? What parties have you had in it? Who was nearby? What are the cafes like? There's going to be the potential is there for creating a site for every house in Ireland, every house in England. And why do you need to put a house on the market? Why wouldn't you just say, I want to live in Ballsbridge? Is it Ballsbridge? Dublin 4, mm-hmm. Right? So, yeah. I want to live in Ballsbridge. That's my favourite street. Why wouldn't I just make an offer on all the houses in that street and see what happens? That's possible. That's technically possible. So I can see us going that way. But what needs to happen, as you've quite rightly raised, is what is the incentive for people for loading all this data? And it may simply be that somebody's going to make you an offer without you asking for it. Somebody's going to, have you ever had the situation where somebody's put a postcard through your front door letterbox saying, I really want to live in this street, would you sell your house? And it's quite arousing, if you don't mind me using that word.
Well, no, I'm afraid I was the person who was putting that note through the letterboxes for about a decade. So I see the benefit of the hybrid on and offline approach. But listen, thank you. So you've been so generous with your time. I suppose the final thing maybe to ask, and maybe this question is answered through the Future of Real Estate course, but has the pandemic created any shift in the trends that you were seeing for proptech in 2021 and 2022?
No. I suppose there's a sort of an obvious unicorn, which is going to be a health monitor for buildings, which probably lines up with a health monitor for people. So I can see that I suppose this is an idea I didn't have a year ago, that, I suspect I'll be having a wearable which will give me access to a building. And if the alarm doesn't go off, then I'm allowed into the building. And if I'm walking up and down a street in Dublin looking for a bar to go into, I might in 2030 be looking for a dial on the outside of that room that tells me that the air's good and that there's not a lot of COVID floating around in the air. And so, that sort of health tech being applied to buildings is probably an accelerated technology invention that we will see more of.
Very good. Andrew, again, thank you so much for being so generous with your time, and best of luck with the course. I look forward to monitoring as well the cohort that goes through that course, and hopefully we'll be talking to them about their innovations. That was Professor Andrew Baum of the Professor of Practice, Saïd Business School, University of Oxford. That's it from us this week. Thank you for listening in to Property Matters on Dublin South FM. You can get in touch with the show on social media at iPropertyRadio or email hello@iPropertyRadio.com. Also, my thanks to Peter Rice on sound. We're back at the same time next week. From myself, Carol Talon, and all the team here, stay safe.